Hello everyone, Corey Mitchell here with your swing trading stock market outlook for the week of January 27th. Each week just go through the same process, help me decide how aggressively I'm going to be trading, what conditions are like out there. There are some watch lists you can check out. Let's look at the indices first. So from a price action perspective, we have the NASDAQ 100, the S&P 500 they've recovered. They've broken out of these little downward channels they're in, and they're just hanging out right near their prior highs. I haven't been in this week except for some very short-term trades or the last couple weeks, as if you've watched these updates regularly. Yeah, and as we'll see, some of the health indicators are still not in good shape. So kind of have the luxury of being able to sit back and see how this reacts around these highs. If, we keep running, great, then the health indicators should be good. I missed out on a bit of the move, but hopefully the easier money's to come. That's the main thing. That's why I use these things. It's not to catch every single move. It is to try to isolate the times when it's much easier to make money and stay out during the times when it's tough. I do not want to be in on this where I'm trying to buy here for the next pop and then get stopped out right away. I want those where conditions are good, you're getting longer term moves like this where it's just trending up. And we're still going to have losing trades, of course, but the idea of this whole process each week is to decide, is it easy money, is it harder money? In hindsight, this week, we kind of shot up, so it looks like easy money, but we also shot up out of a correction, which, and the health indicators aren't good. Those have been pretty reliable for me, so I have no reason to start doubting them now. We also have some conflicts even in the price action. These two indices looking good. Large capitalization indices. NYSE Composite looking at a wide array of stocks and industries. It is still well below its prior high after having made a major lower swing low. So this is still kind of an indeterminate trend. At the moment, I would say this was a downtrending behavior and we're in a correction. So we haven't quite moved out of a downtrending environment yet, but it could. These ones have. Russell 2000, same thing. Downtrending behavior over here when it made these big lower swing lows, has not recovered much. So you even have a conflict just based on the indices. And you can think of it as a scale. If things are really good and kind of all the indices are moving up and most stocks are doing really well, that's a time to be fully deployed, to be aggressive. When you have all these conflicts going on, it's definitely time to be more cautious. There's different ways to do that. That can be capital allocation. That can be, having a tighter trailing stop loss, so that if this market can really turn quickly recently. So if it starts turning, you get out, you lock in your profits, maybe a little bit tighter stop losses, smaller targets. You're still getting a good risk reward, but you're saying, hey, market conditions are kind of weird right now. I'm not going to give this a whole lot of room. It either shoots in my favor or I'm just going to get out. So there's different ways you can calibrate to that. But basically, it's like if conditions are really good, you're aggressive and you give trades some room. When things are not so good, we don't want to give them room. We don't want to be fully allocated, that type of thing. Or at least that goes for me. You do what you want. Bitcoin, strong move up. We've been in this range here. This is the old 100 level. Thought it would be a pretty big psychological level. It turned out it has been. And we've had a couple spikes up. This one here, still hanging out. So we don't really know. I would say this bigger range, I'm calling it a range at the moment, but we've basically gone up once, pulled back, gone up once. Kind of an early call of whether it's going to be a range or not, but this makes it somewhat interesting. So we did have a couple little swings down here. I put a blue blocks around that one. we've popped up to this prior high and we have been consolidating for quite a number of days now. My favorite trade would be this breaks out well outside the range, has a pullback that holds. A lot of people don't like that idea because they think, oh, well, what if I miss the move? Well, I don't know. There's more opportunities. What can I tell you? But that's going to be the best trade. It worked last time. We had the breakout of this big channel. We had the pullback that held outside. That was the great opportunity to get it. So I'm hoping for the same thing here. Pop out, little pullback, holds out here, and then goes. That would be great. There are some opportunities though here. Now that this consolidation's formed near the top of this channel, and it's kind of holding above this old little range too, we get another false breakout. So that's like a drop below, and then it starts moving back up inside. You know, it would take a whole multiple videos to describe exact entry techniques, but that's the basic gist of it. And yeah, so that would provide an opportunity. Another one is you have the consolidation. You get a small breakout outside, and then we hold above this consolidation and start moving up. That's kind of the smaller micro version of that bigger breakout, which may potentially provide an entry here on a smaller move up and out of this consolidation area and a little pullback. So, you know, there are options on ways to trade it. Definitely becoming more interesting. And if it starts breaking down out of this, then, you know, we're probably heading back to the bottom, and then we start looking for opportunities down here on a false breakout again, like what we saw there. Market health indicators. So kind of mediocre still. We've had this nice run up in the S&P. I did put a smiley face on this one, but I do have a little mixed. It's a little volatile, but I would say it's pretty good. But it's definitely not the kind of calm, uptrending environment that we often get in an uptrending environment. Like you can see this period here, very quiet. Up this period, very quiet in terms of daily average movement of the S&P 500. So we have this big drop here, and that kind of set off this volatility that we've been experiencing. And yeah, we still had some pretty big movement days, but it is quieting down. So I said, okay, we'll give that one a favorable. This one, again, too, it's moving up with the S&P 500 recently. This is the NYSE advanced decline line. This is advancing stocks minus declining stocks as a cumulative number. And helps kind of shed some light on what's going under the hood, how many stocks are actually moving up versus moving down. And it is below its all-time high. So the S&P is, you know, up above, and this one is down below its prior high. So it's kind of confirming short-term, but overall showing some weakness relative. So this one, I'd say frowny face to maybe kind of neutral. Again, mediocre. That's kind of been the story of the last couple weeks. This one's neutral. We're looking for extreme readings, either up here or down here. This is basically up volume divided by total volume. So it's either showing us extreme upside volume, like almost all the volume in stocks is in stocks moving to the upside, or if it's a really low number, then all the volume occurred in stocks moving to the downside, or nearly all of it. And we've been in the middle range here, so nothing important. Both the S&P 500 and all US stocks, about 50% of stocks are above their 50-day moving average. That means 50% are also below their 50-day moving average. I generally find it much easier to make money when most stocks are moving up. That way, even if you don't have the best stock selection, you still get the upward movement of the market, and it's generally easier to make money. Ultimate indicator, how many quality setups there are and how trades are working. You can look at your own results and trade list to help you determine that. If it's an easy environment or a hard environment, I like trading in easy environments. If it feels hard, then I stop. And that's, I think, the best approach, because most people will simply lose what they made during the good times when they have hard times. It's very hard to trade well in every single day, every single market condition. So know your strengths, know your weaknesses, and play to your strengths, and sit out when it's a time you don't trade well. I am seeing nice setups. I did go through a quick scan. I looked at the best swing trading stocks list. There's some, yeah, there are some nice trades. There's still some runners out there. So yeah, you can kind of decide. Look at the stocks you've been looking at. How are they doing? That can help you determine whether it's a good time to be trading. But yeah, we're kind of, I feel like we're really on that cusp where it's like, it's not great overall. So we're on that cusp of, yeah, maybe we get a few good days, but then we could just as easily turn and have a few really bad days. So whereas I don't get that feeling, and the health indicators, when they're generally positive, we get stretches where it's really good, and I'm not really worried about the downside. Whereas right now, yeah, it seems like we're just right on the kind of a cusp, and we're deciding, are we really going to go up, and is the market going to be convinced of it, and our health indicators start to improve, or is it reflective of a greater sort of caution out there amongst traders why our health indicators aren't improving? Only some stocks are going up, many others aren't. This is equal weighted, so it might look a little different than some other, if you just looked at maybe like the ETFs of these sectors, for example. So this is reflecting all the stocks in the sector, not just the big ones. And yeah, so we can see technology near the strong end over all of these. We have industrials doing pretty good across all of these. Materials we've seen recently, not so great over the last 3 months, but more recently, materials doing fairly well. And yeah, communication services as well. So again, not the best performer, but it is, doing pretty well compared to the other ones. So those are the main sectors I would watch. Energy was doing well. It had a bit of a fall off this week. So what I'm doing, as it's been recently, I'm enjoying the volatility via day trading and some like selective, very short-term swing trading. That's, I guess, how I'm kind of protecting myself, not fully deployed, and yeah, thinking just kind of like short-term. If I can find a nice entry point and make, I still like going for, 3R, or if a stock's really running, using the tater type strategy, the trend ATR, and letting it run. And there are some out there that are, definitely giving us the runs at the moment. So take advantage of those, but it really is, I feel like, a tight leash for me, where I'm, until those health indicators improve, it's cautious. There is always the option to day trade as well, a little more action every day, as opposed to swing trading, which is periods of action followed by periods of inaction. So that's your weekly outlook. Hopefully you have a great trading week out there.